I wanted to hop up here because I know it's a lot of people that's struggling with trading right now, just in general with the Stacey Burke concept, right? So I wanted to hop up here and talk to you guys about the common mistakes that people make when they're trading this concept. It's like it for one, people that trade this concept cannot grasp that they need a setup. Like that is one of like basics of Stacey Burke strategy. You need a setup. It's either going to be dump and pump or pump and dump. Those are the only two setups you can trade with this strategy. So if I have the mindset of, okay, I'm going to trade a pump and dump, then why would I be looking for anything else that invalidates that? So then when people say, Q, well, is it going to trend or reverse when it gets to this level? I'm like, well, what setup are you looking for? Because if it was trending at this level, if you were looking for a dump and pump, it would make sense. It would make sense. But if you're looking for a reversal, then you're looking for a pump and dump. Those are two different setups. When people trade two setups, that's why they're confused, because now you have multiple variations to look for. When I trade, I only trade with 3 steps. Three. The reason why I do that is because if you look at a lot of people that have like 10 steps, 20, like they have multiple steps, they can't remember it, they don't study it, they don't look at all their screenshots. You need something that you don't even have to look at it. You're going to easily remember it. Step 1, step 2, step 3, that's all you need. You don't have to look at nothing to memorize that. Make your process super, super simple so you barely mess it up. Now, that don't mean that you're not going to get a lot of trash, because you are. Even the best setups lose. However, if you continue to trade the same way with the same mentality, you eliminate a lot of human error. So, with that being said, I wanted to back test a pair I've never back tested before. Let's do silver. I've never back tested silver. And let's say I approach the markets with only one setup in mind. Win or lose, I'm going to back test a whole month. We can start with last. Silver was good to us. We'll do this month. Oh, wait. Yeah. We'll just do the start of this month. So let's say, first of all, if you have a setup, then you obviously have signals that you like, right? Me personally, I trade close and breakouts. I look for either trends or reversals. Now, that's me because I've mastered. When I first started the Stacey Burke strategy, I started off with pump and dumps. That's it. That's all I wanted to trade was pump and dumps because I see sales better. So as I was trading that setup, I learned to master it. And then I branched out. Start off with one setup. So what we're going to do is we're going to start off with a dump and pump setup. That means that if I see a close and breakout, I'm looking for a dump and pump setup at significant levels. Okay. We know that with any type of setup you're looking for, the Stacey Burke strategy is derived off of liquidity traps. That's all the market does is trap people. And if you can figure out where they're trapping at, because you wait for the market to trap them and then you ride the stop hunt. So with that mentality, let's start off by looking for some close and breakout signals. Now, I got a close and breakout to the upside on a Tuesday. If you don't know about the weekly template, I highly, highly suggest you look through my videos or you look through Stacey's videos or whoever mentor you choose. However, you don't have to trade everything, but it is important for you to know certain concepts like the weekly template and 3-day sessions. How do you work with psychology? I work with psychology by accepting the outcome. That's the only way that you will prevail in trading. A lot of people, the problem is that they can't accept the losses like they accept the wins. They accept the wins, but they don't accept when they lose. And nobody can win every time. You're going to have losing streaks. You're going to blow accounts. That's normal, right? The problem is that when people enter trading, they're like, oh, I want to become a millionaire and I want to retire from my job doing this. Do you know how much pressure you just put on yourself? Nobody is going to just strictly retire off of trading by learning a strategy for a couple months. Name somebody that's done that. I'll wait. Like, you have to treat it like a business, like you're in college. So, how you master your psychology is by accepting the outcome, lose or win. I'm not going to give up. I'm still going to keep trading the strategy and I'm going to be successful with this. Whether it's with this strategy, with another strategy, doesn't matter. Trading is not about being right or wrong. It is not. It is about accepting the outcome. So when people say, is it going to trend or reverse? Guess what they're doing? They're trying to be right. They're trying to be right rather than just looking at this and saying, okay, is this a higher high? Well, I know if I'm in an uptrend, I'm going to get a higher low. And then I'm going to wait for a dump after a higher high and a coil. And then that's my setup, step 1, step 2. So I'm seeing step 3, and let me take the trade. It's that simple. Don't overthink it. Another thing is that, okay, let me just go through with this, right? So we know that this closing breakout is bullish, and we can see that on a 15-minute time frame, this trend is bullish. We're making higher highs, higher lows, higher highs, higher lows, right? So when I come to Asia session, this is where when Stacey says, or when anybody says, is it working the high or is it working the low? Now, I trade a little bit different. I really center and focus on market structure because regardless of these levels on the screen, regardless of these session blocks and the scanner, market structure will always be market structure. It will be the basis of everything you do. Think of everything on the screen right now, all these little session blocks, confluence, because I don't need it to know what the market may or may not do because I'm not trying to guess, right? So as long as I can position myself in the best possible area to put my stop loss, I'm good. Now, if I'm looking at this uptrend, let me mark it out. If you're not doing this, I don't know. Higher high, higher low, higher high. Well, no, this isn't a higher high. This is an equal high. When I come back here, what in this picture is telling me that it's bearish? This is what people do wrong, right? They're like, oh, because I see a rejection at a high, I should automatically think sell. No, you shouldn't do that because market structure is not agreeing with you. So if I see that we are dumping into a low, which is this is one of the variations that I look for, my entry models, then I'm going to buy it because it's bullish. It's dumping down. We've broken out, pulled back to a swing low. And now what I'm doing as soon as it gets to that low is I'm going to my lower time frame and I'm looking for 3 simple steps. That's it. I don't make it complicated at all. So this is Tuesday, August 4th. I'm going to go to the 3-minute time frame and I'm going to show you the 3 steps that I look for. I keep it super simple. Let me scroll. All right. If I'm trying to enter this in Asia session, the first step that I need to understand is that I have a dump. Step 1, if this is going down and I want it to go up, there needs to be something that locks in the low, which is a coil underneath closing price. Step 1 is always going to be fail at a low. If we're talking pump and dump, I'm just going to say fail. I'm going to repeat this 3-step process every time. Dump, fail. Now what do I need to see? If this is step 1, I need to see step 2. Step 2 is the higher high on the inside, which is here. Don't look at the price action, look at the structure. That is your higher high. 1, 2, and then my 3rd step is just a simple dump and pump. That's all I want to see. obviously I'm trading a setup, right? But step 1, step 2, step 3. And if you look at this, now resistance is support, which is a common pattern with an uptrend and how it starts. If I'm looking at a downtrend and I want it to fail at a low so I can go higher, it needs to fail, it needs to make a higher high, and it needs to make a higher low, and so on and so forth. You get it? You get the gist, right? That is the same no matter what time frame you're looking at. No matter what time frame. 3 steps. So let's continue. After that, all I'm looking for, break and retest and a retest of a swing low. I keep it simple. Where would be entry and confirmation before entry? The stop loss will go below the last low. Yes. Either that or beneath the failed breakout level, because think about it. If I wanted to enter here, which I would probably enter, let's see, if it came back here and pulled back, I would probably enter somewhere in here, because as long as I'm above the EMA, I'm good. So I would say, let me see. I usually don't even look at silver or gold until 9. But this is 8, 9, 10. Especially if I see this is fire. As long as it's underneath, it needs to be underneath. I don't care where, if your stop loss look like this or this or this, as long as it don't look like this, we good. Put it beneath the breakout. So as I'm doing that, all I'm doing is targeting the high. That's all I want, level to level. We went to closing price, we coiled beneath it, we made a higher high, dumped and pumped all the way back up to the previous day's high. So you factor in time of day as well. I mean, yeah, that's basic Stacey Burke stuff. Time of day, timings, levels, and behavior price. As you can see, we just blast off. After that, like let's say I wanted to trade it in New York session, right? Let's say I'm looking at this and I'm like, okay, it's still bullish. It still looks like a trend. Now I want to see if I can catch another leg. It's the same thing over and over again. I come to the 15-minute chart. Let's start on the 15-minute. All right. Once I get to the 15-minute, what am I looking for? I'm just looking for a higher high to start a dump and pump. And that is all I'm doing. That is basic market structure, because we know that a higher high is going to pull back and continue to make higher lows. So why would it change just because we're trading a strategy? That never changes. The only way you would be able to sell this is if it fails at the high, puts in a lower low for a pump and dump trade, because this uptrend has to turn to a downtrend. Pump and dump and pump. So this ended up working out because we got a nice trade that you could have held until the end of the day on a Wednesday. A lot of people think that Wednesday is just for reversals. That's not true. Wednesday is day 3. It could be trend day or reversal day, right? So look at this. This is another common thing that people do all the time. Close and breakout. First red day. Oh, why didn't it sell the next day? It didn't sell because was it working the low or was it working the high in Asia session? It's working the low. Look at the low. What's sitting at the low right now? A V bottom, right? A V bottom after failing at a low. Understand that 3-day setups have a very close correlation to breakout, pullback trend, breakout, fail, reverse, and breakout in range. If I break out of a weekly level and I pull back first red day and I'm working the low, I'm going to think what? Breakout, pullback, trend. That you have to understand that when you're looking for those type of signals, the first red day and the first green day, you don't want to take a first red day in a bullish higher time frame trend. The first thing you should think in a higher time frame trend is this is a pullback. Because if you go on the daily time frame and you see a huge bullish move, you mean to tell me that it's ready to reverse? It's not. It's pulling back because that's all it's showing you. Stop trying to force things in your trading. It's not reversing. The only way it'll reverse is if it breaks lows. It's not breaking lows. We get to this low and fail. We pull back. We're still respecting this high. So what can I say? We're in a range from this point. When we get back down here, this low is higher. The higher time frame trend must be trying to continue. So we're done pulling back. So when I look at this and I look at this bullish trend right here, if I'm in Asia session, of course it's looking like a buy. When I get to London session, there's no structure. They just take off. The only structure they give you is up here, and that's barely anything. At this point, you should be thinking, dang, this is super high up. I don't know if this is the best trade to take. Maybe I should wait for a more significant pullback. Hello? Maybe I should wait for a more significant pullback. We're too high up. So when I'm looking at New York session, it's not an ideal pump and dump. But if I'm up high and we're working the high in New York session with an A top trap. Now, once the trap is set, now look for your trade. Step 1, fail. Step 2, lower lows on the inside. Step 3, pump and dump. I know it didn't go all the way down here, but guess what? You're not trying to be right. You're just trying to follow the same pattern over and over again. Nobody said that price action had to be perfect every day. Why? Like, it's not going to be perfect every day. Just trade the setup and let the numbers play out. Let it play out. I don't care if you're losing 3-4 times in a row. Keep doing it, because eventually you're going to have an astronomical month because you keep putting the work in. So don't give up. If it's anybody in here that's struggling with this strategy, do not give up. It's probably one of the best strategies on the internet right now. Not even probably, it is. It is. It is. I will never go back to any other strategy. However, you need to follow the process. Again, we get to Asia session, this closed and breakout. We already know we've broken a previous daily high. It's a new week. I'm looking for either a dump or a pump. What is price showing me on the day? In Asia session, we seem to be failing at a low. Step 1. The next step I want to see is a higher high in the inside. Now, that doesn't mean that there are earlier entries, because after this, what is this? A V bottom, right? Trap, shift, right? So there are some people that are comfortable getting in right here. Me, I like to see what I like to see, not what everybody else likes to see. Hi, Faze. Can you help break down EU and GU next? I want to understand how you would read it. Absolutely. So you factor in yep, I already answered that. Okay, cool. So after we fail at the low, look at the market structure. What does London do? Asia fails. London puts in a higher high. Inside of where? The dump after making a higher high, right? It's all about what price is doing in the session you're trading. Here, we were up high, we pumped through, and we failed at this high and put in the A top, so now we're selling. If you're trading Asia session, we're working the low at a monthly level. Boom, higher high in London for a dump and pump. And guess what New York does? When it dumps after making this higher high, guess what it does? Fail at a low. Fail at a low, higher high, higher low, higher high, higher low, so on and so forth. That's all you have to do. 3 steps. Close and breakout, right? Reversal trade. What's sitting at the high right now? A peak formation. Peak formation. If I am a reversal trader, this is what I would be looking for. It's working the high. You can even say this: breakout, pull back, fail, reverse. All I need to see, are there people trapped? Yes, above the daily high. Now all I'm doing is looking for lower lows in the inside. If this was my last low before it pushed up and made a higher high, look at the candle body closes. Look at the shift. They never get back up here. These people are trapped. If they're really trapped, they're not going to come back. They're not going to come back if they're trapped. A lot of people don't wait for it. They just try to take a sell in an uptrend without understanding what they need to see first. Now, common mistake again. They get a higher high. It's a close and breakout, right? Through a weekly high level. First red day. They don't get the first red day trade until New York, but they say, well, why didn't it sell? I was sitting at the screen in Asia session and it kept pumping up. What are we working? Are we working a low or are we working a high? That's it. That's it. All you need to know. In Asia session, we've already failed at a low. We put in a higher high for a dump and a pump. Do you see it? 1, 2, 3. Off the weekly. When we get back to the high, if you're looking for a sell setup, would this not be the setup that you're looking for? At a high. So when we get up here, this is another thing. Again, price action has not been the best, but the setups have been there. It's all about the 3-step rule. 1, fail. 2, lower low. 3, pump and dump. Simple. You have to think about it like this. It's an uptrend transitioning to a downtrend. And the only way it can do that is a peak formation. I know the price action looks terrible, but if it looks terrible on a lower time frame, you're on there too early. You need to go back to the 15-minute time frame and reassess the situation. There are people that will look at the 15-minute time frame and have a thesis, have their setup, then drop down to the lower time frame and switch it up. There are people that will come to the screen with a setup, they trade it, they get kicked out the trade because they might have got the timing wrong, and then they switch their bias. Why? I thought you were trading a setup. So because your setup didn't work out, now you want to switch it, and then you wonder why you can't get the strategy. No, it's you. It's not the strategy. It's just you not locking in and accepting the outcome of the situation. You will lose. Sorry. It's hard. Look at these wicks. Look at these wicks. Do you honestly think that somebody is a professional and is timing this market perfectly? If they are, props to them, but this is not easy to read. So of course, it's going to be hard to gauge the timing sometimes. But you just have to keep showing up to the charts because every day does not look like this. It doesn't. So on top of that, you need to learn how to manage your risks too. You cannot be sitting here risking $500 on a 50K account on something like this because especially, let's see, where's 930? 930 is right here. It just made a lower low on the inside for a pump and dump. So maybe this one, I could see this one because you kind of skipped all the wicks. This might have been news. I don't know. It might have been news this day or something. But regardless, play your cards right and put size on the setups that you are actually confident in, not setups that you think should happen. Like you think this should be like this. So that's why you took the trade. That's not confidence. Confidence plays a big part, especially in my trading. Especially in my trading. When you add size, it makes a difference. But if you add size and your risk isn't right and your mindset isn't right, you will blow accounts left and right. Close and breakout to the downside. I'm looking for a reversal trade. It's the same 3 steps. Step 1, fail. Step 2, higher high. Step 3, dump and pump. I don't care what it looks like. Step 1, step 2, step 3. I'm taking it to a high. That's literally it. When we get to New York session, where is it at? It's at a high. It's at a high. I got an A top above the weekly level. It's going vertical. Do you understand that all of what Stacey's saying, it's there, but you have to keep studying. You have to keep putting in chart time. That's the only way. So you look at the body close for structure shifts and wicks. Yes, I do. I just noticed that that was a little bit more accurate for me personally. I know some people look at the wicks, but I think about the wicks as manipulation. That's just me. So again, boom. Now it looks like we have a close and breakout, and then we have a close that's higher than the open. So you have people calling it a first green day. I'm gonna be honest with you. This looks like sideways movement. I would not call this a first green day. Same apply for first red day and first green day or inside day. Look what price is doing. Literally, look at what price is doing. This is a dump and pump template. Look at the days of the week. You have Monday, Tuesday, Wednesday, Thursday, Friday. This is a perfect template right here. Think about how a weekly candle forms. Wick first, then body. So of course, they're going down, front side of the week. And then day 3, trend day or reversal day. Reversal day. First green day, low of week. Look where it's sitting at. At that point, once I get, you can apply the same concepts, right? It's going down. So what do I need to see? I need to see a fail at a low. In London session, do we have a peak formation? Yes. This looks like either a W or a coil. I don't care. It's a peak formation. Now I need to see a higher high in the inside. So now we understand why New York session makes sense. Fail. Who's trapped? Sellers below a weekly, below a daily. They break back in the inside, and at that point, it becomes a trend trade for me because I'm on the backside of this move. Backside, simple market structure techniques. At that point, I'm looking for 2 specific patterns that I like to trade. That's literally it. Close and breakout. Are we working the low or are we working the high? We are working the low. What peak formation is this? V bottom. Where do they stop hunt? The low of day. Do we have a higher high? They break this high. They break back inside the EMA. They do a little retest here, maybe on a lower time frame, and then they blast off. Low, high, close and breakout, breakout, pull back, continuation. Close and breakout again. Look at the dump before Asia session. There needs to be a peak formation that locks in this low. Hello. They buy from the low. Coil at closing price. Continuation. Trade. London, they buy from a swing low. They're always going to buy from the low. They're always going to sell from the high. So that's where you need to be placing your positions. In New York session, we get straight up trash. It happens. Moving on. Manage your risk. Now, what do we have? After we broke out of this high, there's consolidation sitting up here. Monday opens up and it's straight up trash. And you have people still trying to trade this. At least if you're going to trade trash, trade it from the highs, because that's where sellers are in a consolidation. If you're going to trade trash right. Trade it from the high, dang it. All right. If you're going to buy trash, buy from the low. When New York opened up, we were up high. We're working the high. I get it. When New York is over, we're working the low. Look at the fail. I get it. How do you know peak formation is formed and confirmed, locked? I always get confused about peak formation, high or low. Peak formations, I look for specific ones. A tops, M's, and coils if we're talking about cells. Okay? Only 3. If it's a buy, I'm looking for a V bottom. I'm looking for a W. And I'm looking for a coil. And those are the only peak formations I need to know. How I know a peak formation is locked in, it's by waiting for a V and waiting for them to trap them below a level. Below a level. When they break back in the inside, if these people are really trapped, why would they break back out? They're going to let these people out of losing positions. False breakouts. Every time, look at the extremes. You got to look at the extremes. So if I'm looking for a peak formation, you see this M sitting right here? When they get back up to this high, they put in an M. It's not the fact that I'm looking at the live market and I'm trying to see an M form. No, I'm waiting for the M to form, and then I'm waiting for it to break down and create a lower high for a lower low. That's what I'm doing. They go up, they put in a peak formation, and then they break down. The minute they break back inside that 20 EMA, I'm looking for entry. So working the high or working the low after a closing breakout. What about the overall daily time frame? Do we consider it? Yeah, you consider the daily time frame. These signals are derived from the daily time frame. But if you ask me if I look at it, I'm going to say rarely. Rarely. That's just me because I don't need it to know what the higher time frame is doing. We literally have the daily levels marked out. They're you can see what each candle is doing. The only time that I will consider the daily time frame or I'll look at it is if I'm going up and then all of a sudden I get a first red day, and then I'll look at the daily and see if we're trending up or we're trending down or we're in a range. So I can make sure that, okay, if I got a first red day and the trend is bullish, then I'm going to need supporting evidence tomorrow. Supporting evidence tomorrow. Okay. That's the only time I consider the daily time frame. But I do think that it's necessary. It's definitely necessary to understand what the chart is doing. But I don't think it's something that you have to look at multiple times. Like every single time you come to the chart, you don't have to look at the daily time frame to know what the daily time frame is doing, especially if you have an indicator where they're sectioned out Monday, Tuesday, Wednesday, Thursday, Friday. You can see the weekly template playing out.